Hi, this is Jessica Blassingame with Beam Financial Group, and in this screencast, we're going to talk about the accounting for owner's pay. So before we jump into that, I want to let you know that there was a video that I did first where I talk about how to pay yourself as a business owner. And that's a really good idea to watch that first because we talk about all the details behind how you will actually pay yourself and how that varies depending on if you're a corporation or an LLC. So to see that video, you can go to my website, which is just beamfinance.com, and there's a tutorial section. And then I have this video, Paying Yourself as a Business Owner. You can also find it on my YouTube channel, Beam Financial Group, and it's right here, Paying Yourself as a Business Owner. So I recommend that you watch that first unless you already know what you're doing as far as paying yourself and you just want to learn the accounting or the bookkeeping for the transactions. So when you decide how you are going to pay yourself, then we want to record it in the books, and that's what we're doing here in this screencast. So it's really pretty simple once you kind of know how you're going to pay yourself. And we'll start with the example that, you're a sole proprietor or an LLC or a partnership, and you're just taking a draw from the business. And again, if this doesn't make sense to you, watch my other video. But if you know that you want to take a draw from the business, you just want to record it properly in your books, then we just want to set up a couple of accounts. So we're going to go over here to accounting and then chart of accounts. And we're going to first create what we call a draw account. And the only caveat here is that the name of this account will change depending on your organizational structure. So if you're a sole proprietor, you're called an owner. So we'll call this an owner's draw. If you're an LLC, you're called a member. So it would be called member's draw. If you're a partnership, you're a partner. So partner's draw. And that's basically all we need to know is that we will title it something different, but it's essentially the same account. So we'll come in, we're in QuickBooks Online here in a test account. So we're going to come into the chart of accounts and create an equity account. So if you'll remember that this is an equity transaction. This isn't an income or an expense transaction. This is equity. You're drawing money out of the business. So account type is equity. Detail type is typically owner's equity. And again, this name will change over here depending on the type of structure. So if you're a sole proprietor, you're an owner. So we just call it owner's draw or owner's distribution, whatever you prefer, same thing. If you're an LLC, let's say we're that for this example, you're a member, so it would be member's draw. And then that's pretty much it. You're just creating this draw account here, and then we'll save and close. So if you look in the chart of accounts, it will show up under the equity section right here. So member's draw. While we're here, I like to create the other side of this account, which is a member's contribution or member's capital. And that's just when you put money into the business. So there may be instances where you're funding the business or you just need to put some money in to cover some expenses. And that is the other side. So that's member's capital or member's contribution. So while I'm setting up this draw account, I would just go ahead and set that up so we have it. And same thing, owner's equity is kind of the encompasses both of those types of transactions. And then remember that we're a member because we're an LLC. So members, and I'll call it contribution or members capital. So now those accounts are there. So whenever basically what will happen when you take a draw is we'll go to the banking center and you'll see, let's just take this $800 for example. $800 went out of your business checking. And let's say for this example, you transferred it to your personal account. So you're drawing money from your business checking to your personal checking. So all you would do here is you would choose that account that we just created, and that was a member's draw. I typically will put a name, so whatever the name of the owner is, that your name as the vendor payee, and that's it. And then you're going to add that transaction. So once you do that, it's going to show up on your balance sheet. So again, we'll talk about this in the video, but people get confused sometimes. They think it's going to be on the profit and loss, but it's an equity transaction. So it's on the balance sheet. So if we scroll down here, we have our members draw account under the equity section, and there's that $800 that we drew out of the business. So that's the full cycle there. You're just going to capture it in your bank feed, put it to the right account, and it's going to show up on your balance sheet. And if you had any contributions to the business, they would also show up in this section. So that's how you would account for your transactions if you're taking a draw on the business. Again, if you're an LLC or you're a partnership or sole proprietor. If you're an S Corp or a corporation, and again, we discussed this in the video, but you decide you're going to pay yourself via payroll, the setup will be different, and it will depend kind of what payroll service you're using. If you use QuickBooks Online or QuickBooks Payroll, then they'll typically set up the accounts for you when you go through the setup process, and all the transactions are integrated in here. So you will typically see two accounts for those transactions. So you see a wages account, and you'll see payroll taxes. And what payroll taxes are, they're the employer portion of the payroll tax. So, and that just important to note that that would show up on your profit and loss. So you'll see a line for wages under expenses, and then you'll see a line for payroll taxes. And if you're using QuickBooks, again, they're going to set up the accounts for you. They're going to integrate that. They'll do the entries when you run payroll. So it's pretty seamless, and it'll show up in your profit and loss for the expense side. There's also a liability piece for that because they're withholding taxes from your payroll. I don't want to get into that too much. That's kind of getting into the weeds, but I will have videos and screencasts later on payroll. So look for that in the future. But if you're not going to use QuickBooks and you want to use an outside payroll service, like let's say Gusto, really like Gusto, what Gusto does is they sync with QuickBooks. So you'll run everything outside of QuickBooks. You know, you run your payroll in Gusto. And then what they do is they push what are called journal entries into QuickBooks to categorize these transactions for you. So all you have to do is make sure you set up the sync between Gusto and QuickBooks, and I will have a video about that. And once that's set up, the journal entries will come in, and again, it's going to categorize the transactions for you. You will see them in those two accounts that I mentioned, wages and payroll tax. So, and then if you're using some other payroll service, like let's say ADP, most of the big payroll services have a way to sync with QuickBooks Online. Some of them are more seamless than others, but typically they can be set up so that they push the transactions, you know, the journal entries in and categorize it for you. If for any reason you need to set up the accounts in order to get those transactions categorized, and that's easy to do. So that's just going back to your chart of accounts and setting up two expense accounts. So you would have, like I said, wages. So we'll go to payroll expenses. Wages or salaries, something like that. And then you would have payroll taxes. So another expense account. This is under payroll expenses and, payroll taxes. And I like to put these under a parent account. So I'll typically create an account just called payroll expenses. And then I'll put those two accounts that I just created. Wages was one. I'll put it as a sub account of payroll expenses, just so we kind of have it in one place. And let's grab that other one, which was payroll taxes. Under payroll expenses. So now we'll see if we scroll down here, payroll expenses, and then underneath we have payroll taxes, which again is the employer portion of the tax, and then wages. So that's there is often a lot of confusion when payroll entries come out of the bank. They're typically, you know, two lump sums, right? There's an amount for direct deposit, and there's an amount that goes to the tax agencies. They don't line up easily with these two accounts. So that's why you need those journal entries. And this might sound confusing, but just make sure that if you use an outside payroll service, that they are syncing to QuickBooks and they're pushing in some sort of journal entry, because that will help categorize. It'll show the breakdown between wages and payroll tax, and it'll also show the breakdown of direct deposit payment and payments to the tax agencies, and it will do all of that in a journal entry. So it categorizes it for you. Otherwise, it can get kind of confusing. So if this sounds tricky, just talk with your bookkeeper or accountant. Make sure it's set up right, because if it gets set up wrong, then you might have a whole year worth of data that's not being categorized correctly. You'll have to go back and fix it. So just important that it's set up properly in the beginning. So just to recap, we have different accounting depending on if you're taking a draw on the business. If it's a draw on the business, it's an equity account, which we went over how to create. If it's through a payroll service, you will most likely have these accounts, wages and payroll taxes, and you'll have to sync your payroll service to QuickBooks and have it push in those journal entries. So I will be doing a video about how to set up that sync with Gusto, between Gusto and QuickBooks, which is pretty easy to do. So stay tuned for that if you're using Gusto. Otherwise, reach out if you have any situations with your current payroll that you're not sure about. Thank you for watching.